Investing in real estate is the most common way for average Joes to build wealth. It typically starts off with owning your own home, which in and of itself is a sizable, if not profitable investment. It can then expand to buying other properties, fixing them up, renting them out. Now, this strategy really, is it profitable? Are there any nuances or pitfalls that you should be aware of? Can you lose money with the buy and hold real estate strategy? By the time you're done watching this video, you're gonna know the answers to all those questions. So, lovingly, tenderly, gently, smash that like button for the YouTube algorithm, and let's get started. You're watching Finance Squared. I'm your host, Derek West, and on this channel, we love talking about all things personal finance, and increasing your wealth via real estate is definitely in that wheelhouse. If that topic interests you as well, do yourself and all of humanity, frankly, a favor, and subscribe to this channel with post notifications turned on, so you don't miss a second of the action when all the nuggets of wisdom drop. Let me start off by saying, I didn't make my money in real estate. In fact, I made my money by studiously avoiding real estate. The reasons for that is I, like many first-wave millennials, was spooked by the housing crisis of 2008 and 2009. If you remember it, you Gen Zers, housing prices across the country slid off into a cliff, and many pundits at the time were wondering if it would ever recover. In addition to that, I was saddled with tens of thousands of dollars in student loan debt. I was trying to get a startup company off of the ground, and I was really struggling with my finances in general. In other words, I simply didn't have the money to get into the real estate game, but I instead focused on technology and my career. Now, I'm a software engineer and information scientist by formal training. You know, those tens of thousands of dollars in student loans actually got me 2 pieces of paper that say that I have a bachelor's and master's degree in those topics respectively. So those student loans weren't all that bad. But in any event, I dove in headfirst on those topics and stayed there for years, following my foray into startups. Every once in a while, I'd come up for air to invest in things that were at the time cheap speculative investments, you know, Bitcoins and altcoins and other things like that. But I also studiously saved my emergency fund and invested steadily in index funds and ETFs, not to mention single stocks. So I say all that to say, I'm not an expert in real estate investing at all, frankly. I do, however, have experience in turning nothing into something and have a good grasp of the fundamentals of investing. And one of those important, if not slightly overrated fundamentals, is that of diversification. The 2-second, please do not click out of my YouTube video version of the definition of diversification is, do not put all your eggs in one basket. And as an example, being invested in crypto is a basket that is fraught with danger. I have a couple of videos on that topic and a couple more coming out in the coming weeks, so make sure you're subscribed to the channel with post notifications turned on. But I will say I've done a decent job of diversifying my investments by also being invested in index funds and ETFs that track S&P 500 as well as other small cap stocks. But if some is good, more must be better, right? Anyway, investing in real estate has always intrigued me, and the methodology that you're most likely to run into when learning on the subject from such real estate luminaries such as Grant Cardone or Graham Stephan or that Kevin guy from Meet Kevin. Well, they each hold to and advocate for the buy and hold real estate investment strategy. So as a relative real estate neophyte who has had successes in other investing ventures, I of course had to do my research before diving in. And I'm presenting that research to you guys free of charge. Like and subscribe. But I asked myself a series of questions to help me get a better understanding of this philosophy. Namely, what is buy and hold? What are the upsides? What are the gotchas? Can you lose money buying and holding? And if so, how much? And finally, and most importantly, what is my strategy if I'm going to pursue this? Let's take a look. Buy and hold for real estate investment purposes refers to purchasing real estate for the expressed purposes of renting it out to people who are in the market for real estate, but they may not want or cannot purchase real estate of their own. For example, maybe they've not saved up enough money for their down payment, or perhaps their credit is too bad to get a really great rate on a mortgage. Plenty of people, unfortunately, find themselves in a position where they have overextended themselves on credit. Most likely because if they are credit card users, they paid only the minimum amount due on their card and not the full balance within the period of the loan. Quick credit sidebar, when a bank or other financial institution is giving you a credit card, they're effectively giving you an interest-free loan for a time period that is a month. And if you pay it back in full before the loan term expires, then you don't owe the bank a dime. This is all dependent on the card you signed up for and the terms and conditions of said card. But if you do not pay the full amount past that date, then you're responsible for paying back the original amount plus interest. And those interest payments can be explosive, anywhere from 8 to 15% or greater. Depending on your financial discipline, this could lead you to a place where you quickly spiral into a bad debt situation. And when I say bad debt, I mean debt which is utilized exclusively for things that won't make you any money. Things like clothes, watches, cars, and yes, in my personal opinion, homes. Which takes us back to the topic. That is a situation that many people find themselves in, and unfortunately for them, but fortunately for you, they are not in a position to own their own home, but they may be in a position to rent. Whatever the reason is, there is a market for people who want to rent and not buy, and that is a market that residential buy and hold investors target. And for anybody that has interest in real estate here on YouTube, that is the most famous type of real estate strategy, the buy and hold strategy. There are others out there. For instance, buying commercial properties to lease to corporations who need space for their employees, leasing parking spots to patrons who need to park their cars, leasing warehouse spaces to people, or corporations who need to store their inventory and junk. Buy and hold real estate investing is a deep and long investing field that can take you down many paths. But for the sake of this video, what I'm talking about is buying and holding residential real estate for the purposes for renting it out to homeowners. Now, the reason that I and many other investors stick to this kind of real estate is that it's probably the easiest to get going and to get profitable in. Let's take a look at some of the upsides. One of the upsides that people gravitate towards when they get into buy and hold real estate is the fact that it's so easy to get into, or at least that's what so many of us are led to believe. With this strategy, all you have to do is target homes that have a certain profile. Let's say 3 bedrooms, 2 bathrooms. That's the most common type of house that people will rent out. All you have to do is find a home of that profile that needs just the right amount of repair, fix it up to add value to it, find renters, and if you did all these things correctly, you should have a cash flowing real estate investment. Pretty easy, right? Yeah. Not that hard at all. That said though, it's not the easiest investment path out there. Investing in stocks, index funds, ETFs, and crypto, frankly, are all much easier than investing in real estate. At least in terms of the things you have to do to be invested in that asset. But as far as options outside of crypto and stocks and things of that nature, it doesn't get much easier than this. If you were to invest in franchise restaurants or other shops, you would need to get an investor, predict traffic patterns, along with finding a building to lease so you can do business. For real estate, just simply go through the same process that you went through to purchase your personal house, if you purchased a house to live in that is, and voila, you are now a real estate investor. Another great plus for this type of investment strategy is that the financing for real estate investing is also relatively simple. I'm not going to say that real estate is the only type of investing where banks will give you cash to increase your profitability like some YouTubers out there. Mostly because there's a whole sector of banks out there called investment banks, whose whole goal it is to hand out cash to investors to help them increase the profitability of their investments. But in real estate, the kind of money that you can be loaned to purchase the assets that you're going to get back is pretty crazy. In some instances, in some places in the country, if you have really good credit, you'll need to save up a 10 to 15% down payment on a $1 million house. Now, with the caveat in mind that your mortgage insurance rate is going to be crazy. Nevertheless, that's a pretty insane way to build wealth, and that doesn't even get into the ease of understanding real estate. A lot of people refuse to invest in the stock market because they just can't grasp what's going on with it, or really how they're making money with it. And of course, every time there's a massive crash like in 2008 or 2020, those are the first people out of the market and the last people to buy back in. But with real estate, it's really simple to sort of understand the supply and demand mechanics of real estate. When there's not a lot of people buying houses, the price falls. When there are more people buying houses, the price increases. Really simple, right? The other great thing about real estate investment is that you're honestly building your wealth with other people's money. When you purchase a house to rent out to someone else, those renters are paying you to increase your equity in the property. Now, certainly, you'll have to do a ton of legwork to save up the initial down payment, find the right house in the right conditions, in the right neighborhood, find the right renters who will simultaneously take care of the place and not move out as soon as something better comes along. But they're definitely paying you to get rich. Not a bad deal. But as with anything, it's not all sunshines and lollipops. Nothing is all upside. There must be some gotchas with buy and hold real estate investing, right? Well, let's dive into that. So in purchasing a home that you're going to rent out, you got to go through a ton of work to really only see a tiny profit month to month, literally like $200 per housing unit. If you are someone who's looking to increase their monthly cash flow, real estate investing is not really all that it's cracked up to be. To get into the really high monthly cash flows of people like Grant Cardone and folks like that, you have to get into volume buying of homes, meaning apartment complexes, and those don't come cheap. To be fair, the idea is that you purchase one house at a time, building up a portfolio slowly but surely that you can then leverage to purchase an apartment complex. Yeah, it is something that you can do, and a lot of people are really successful going down that path, but you have to be in it for the long term. Another problem with real estate investing is simply the level of competition to own houses. So not only do you have to compete with other real estate investors for this strategy, you have to compete with regular Joes who just want to buy a house to live in. Purchasing housing has been ingrained in our culture as the way to live the American dream. Rightly or wrongly, most everyone believes this, and that means a ton of competition for all the good deals. Trust me, as someone who's been looking to get into real estate investing for a while now, the second the right deal comes along that fits all the criteria that you're looking for, it gets snapped up by someone else who may or may not have a larger bankroll than you to work with or more time on their hands to execute the transaction. Which leads me to my next point. To get truly profitable at buying and holding real estate, you need to find properties that you can add value to. And the properties that simply need a fresh coat of paint or some simple landscaping are snapped up so fast most everyone's head will spin. So you're left with properties that need a lot of work, and those are precisely the properties that most standard mortgages won't finance. So you end up getting a hard money loan to finance the purchase and rehab the place, at which point you flip it into a regular mortgage so you don't get hit with outrageous interest fees that hard money lenders will typically charge you. Which of course leads me to my next question. Can you lose money doing the buy and hold real estate strategy? Here's a little secret. You most certainly can. If you, for example, can't find any homes that are in need of just the right amount of repair in the right neighborhoods where your home will be valued at a reasonable amount, and you instead opt for a house that doesn't need much work at all, you will likely run into a scenario where you will end up paying way too much in monthly payments, including mortgage payments, property tax, mortgage insurance, HOA fees, etc., where you will not be profitable at all on the property in terms of month-to-month income. Now, some people are fine with that and are only looking to build equity in multiple homes at the same time that will build their wealth while they sleep. Not the worst strategy in the world, but if you're expecting to be making significant amount of money month to month in terms of your cash flow, you might be disappointed. It's similar if you pick a home that needs a ton of work. You more than likely need creative financing to pick the property up, particularly if you don't have the cash on hand and can't or don't want to borrow from friends and family. You will likely have to borrow from a hard money lender. We just talked about those guys earlier, and they can charge outrageous interest rates. And if you can't finish the renovations for the property on time and refinance that loan into a standard mortgage, then you will be charged enormous interest and other fees, which will of course eat into the profitability of the entire strategy. And you may not be able to finish the project at all, and that means that you might have to declare bankruptcy. Not great. So my strategy. The promise of real estate investing sounds so great, but some of the realities seem a little discouraging, which leads me to my strategy for buying and holding real estate. Like with all investments, if you don't like what you see, walk away. This is an important principle to live by. Don't fall for the FOMO that you're missing out on massive real estate gains and that you just have to buy something to get started. Again, if you don't do it right, you could end up losing money or worse. Be realistic. Anything that sounds too good to be true probably is. That's true for real estate, it's true for stocks, it's true for bonds, crypto, and even things that are not really related to investing at all. Be skeptical and question everything about your investment, but don't be afraid to pull the trigger when the right deal comes along that meets your investment criteria. Don't let your skepticism and research turn you into a wannabe investor, someone who only watches YouTube videos and reads blogs on the topic. The truth is that real estate investing can be very lucrative. Most millionaires are connected to real estate investing in some way, shape, or form. If you want to be among them, you can't be afraid to dive in when the time is right, which is what you should be doing to hit that subscribe button and the notification bell for this channel. And by dive in, I mean gently clicking it, so that it registers with those luminaries over at YouTube that this is the kind of channel that scratches your personal finance and investing itch. Remember to like this video if you liked this video, and be sure to drop us a comment down below with your thoughts on buy and hold real estate and the strategies behind making it successful. Are you more excited, less excited, just as excited to get into real estate investing after watching this video? We're all dying to know, so make your voice heard in the comments down below. And remember, a goal without a plan is a wish, and a goal with a plan and no action is a wish list. Thanks for watching the video. It means a ton to me, guys. I'll catch you next time. Peace.